All right. So welcome, Greg. I'm pleased today to welcome the founder of AO PropTech, which is the largest PropTech fund in Europe. Certainly, Greg is among the most important people in that specific market in Europe. And so the purpose of our conversation now is basically to get to know him a bit more and understand really the vision for the future of the segment. So maybe as a first question, Greg, could you tell us a little bit more about yourself? So what is your background? What animates you outside of work? What passionates you?
Great. First of all, thanks for having me. It's a pleasure to see you. And look, I will answer in a very cliche way, but unfortunately, that's really the best way to define me. Is I'm really a son, a husband, a father, and a friend, and that's really what's defined me throughout my entire life, above and beyond anything else that might come after. That's really the four pillars of my life and my personality, and it's been really an important way for me to drive my life with stability, sense of responsibility, sense of purpose, and all the gratification that comes from those very important relationships that you build over life. So that would be the easiest way for me to define me. But aside from that, I was born in Switzerland, and I grew up in Switzerland from a Italian Argentinian mom and a French father who was born and grew up in Morocco. And I moved to the UK when I was 21 to finish my studies at London School of Economics, and then started my career.
And then you landed at AO. Speaking of which, can you maybe explain to us the story of AO? I mean, what is beyond these funds? How was the fundraising going, and what's the story of AO?
Yeah. So look, I'll answer that by I'll take a couple of steps back, because I really think that what AO is the convergence of really the first 3.5 decades of my life, and what has defined me as a person, as a professional, what my inspiration has been, what my vision has been, is really the fruit of all those experiences that have made me. And I would say it started very early, from very early on. When I was a year old and change, I was very ill as a kid. I had a long-term illness, and I actually was not supposed to make it. And so very early on, I had this sense that, hey, I have a second chance in life. I am lucky, so I'm not feeling bad about myself. I'm lucky because I have this second chance, and I have to make the most out of it. I have to make a difference. I have to live life. I have to try to leave a trace of my passage on this earth, however long it's going to be. We don't know. And so that was the first shaping part of who I am. And then I had spent probably 10 years at school where I suffered a lot from bullying, extreme bullying, which is something I care a lot about today, because I think bullying is a huge issue in today's society. But coming back to your question and trying not to divert too much, I think that's also shaped me in feeling like I always was an underdog, and wanting to always side on or be on the side of the underdog, and kind of going against the odds when they're stacked against you. And I think that's also shaped me in a way, because when you think about it, venture is about backing the underdog, by backing an idea or vision that might seem crazy, where the odds are stacked against it. And so I think that's part of that mentality of mine came from there as well. And then I went into study, and then I knew I wanted to do something meaningful, but I also knew that I had to get experience work, be a professional, so I could shape whatever it was that I was going to do later. So I went into banking, which, in hindsight, maybe not the most inspiring industry, but at the time it was kind of, banking, early 2000, mid 2000, like 2004, 2005. And I'll be honest, I pretty much hated everything about it. You know, I'll never forget when I joined. I was in a room and someone said, one of the VPs or directors or whatever it was, said, "You guys should feel lucky. You're in the room with the smartest people on the planet." And I just like, this felt so wrong. And, you know, this was so opposite of my view of, you know, being humble and just, but I also knew that this was going to be a great school to teach me, you know, discipline, hard work, but also shaping what I liked and what I didn't like about culture, you know, vision, etc. So I ended up spending almost 10 years in banking. I think it took me a while to get out because, you know, went through the crisis, and it was, you know, the great financial crisis and so on. And, you know, most of the people had been fired, and I felt lucky that I was still there. But I left when I turned 30. Really, when it turned 30, the gong happened, and I said, if I don't leave now, I'm never going to leave, because you can't leave the day you have a wife, a kid, you know, and therefore I just left, not knowing what I was going to do, but knowing what I didn't want to do, which was being a banker for the rest of my life. And so after a few iterations, I started a real estate investment and advisory practice, which is AMD Capital, which really had a big takeoff. We transacted billions and billions of dollars of deals and investments. And as I was doing that, I started seeing, you know, the emergence of technology and the absence of technology in the industry.
Yeah.
And also, as I was doing that, I realized that what I was doing in real estate and investing, you know, in real estate in direct assets or in public markets was great, but I was missing this extra thing, which is the sense of purpose. I knew that what I was doing might be making money. It's great, but it's not what I'm not going to be remembered for. It's not going to make me feel about trying to make a difference. So when I saw, you know, the technology, and I started researching and looking at it, you know, this was still the early days of PropTech. I realized that, hey, I'm able to maybe combine all this experience that I've had, but also attach it to my mission and vision, which is I want to make a difference, right? And I want to back the underdog, and I want to try to go against the odds. So that felt like that could be the platform for me finally become who I always wanted to be, which is that person who does all those things. And then when you add on top of that, you know, the realization of climate change, and I'll be honest, when I started, I was not as educated as I am today about the impact of real estate on climate. And that was just the cherry on the cake, which gave me such, you know, inspiration and feeling that, you know, we're onto something interesting, we can make a difference, let's go and build this, let's go and do this. So that's what led to AO. And I think how we raised money and how this came about, this was quite unusual, because I ended up raising the money before even starting. I went to LPs, investors that had known me for a while, that had been invested or partnered with me for a long time, and that bought into this vision, because this was a vision on a piece of paper. There was nothing else, right? And so, you know, I think it was great to do it this way. And then when we started, you know, we didn't have a website. We were completely kind of under the radar, which was more my DNA, which I don't like to be in the spotlight. But I also realized that in venture capital, it's actually the opposite. People are probably spending too much time out there marketing themselves. So I think I had to find a balance between the two. And I think that's pretty much where we are today, where I think we're in the middle of two extremes. And I think that's probably where we'll stay for a while.
Excellent. Well, you mentioned a number of points that I would like to deep dive in, but you touched upon the importance of humility. Also, it's striving to see the common, I would say, your common points with Elon Musk, who also, of course, use his kind of experience of bullying to create a driver and a motivation to start entrepreneurship. And but I would like to maybe deep dive more into AO. Can you explain to us what are all, I mean, the key terms, so the fund size, the geographical scope, what excites you, stage of maturity?
So look, we are a slightly unusual animal in the space. And first and foremost, we are currently investing out of evergreen capital. So we don't have timing limitations that traditional funds have. And that was really important for me because I wanted to remove time from any consideration of investment, whether being rushed into investing and deploying the capital that we raised, or being rushed to get out of our investments because the fund timeline would be too short. So today we're investing out of a 250 million evergreen vehicle. We are a European shop. There's no doubt about it, but we have global ambition, and we're investing in, Europe, US, also Israel. And the idea for us is it doesn't matter where the entrepreneur is. We want to be able to back the best in class, the category leader. They might be global category leader, they might be continental or regional category leader. We want to be able to assess and meet those people wherever they are, because at the end of the day, if you are indeed going to be a leader, a category leader, you're going to become most likely a global company. So you'll be operating in Europe, you'll be operating in the US. And for us, as long as we know that at some point down the line, whether it's immediately or 6 months later or 2 years later, we can be tremendously helpful along the way, then that's good enough for us to know we should be an investor in this company.
Yeah. And I think,
so just to finish, we write tickets between $2 and $15 million, take it or leave it. We've started also going a bit earlier sometimes, because not everything fits in one mold. You have to be a bit flexible. Sometimes you meet amazing entrepreneurs and there is not enough space to deploy capital because it's too early, and you have to take a chance sometimes. So we also are able to do that.
Yeah. And I need to really emphasize the fact that an evergreen fund is really what is, I think, the most exciting for founders, because you don't have time pressure to sell your positions, and you really have a long-term alignment of interest. And so I think all the VC funds should be like this. But unfortunately, the majority of them are obviously 10-year plus one or something like this.
You couldn't be more right. I think it's the best capital an investor could dream of, and it's the best capital an entrepreneur could dream of. Unfortunately, it's not necessarily mainstream. And so as a fund, you have to make a decision that a lot of LPs won't be able to do that. So I think today, in where PropTech is versus 2 years ago when we launched, where we had a big question mark about how quickly adoption is going to happen. And therefore, if I don't know how quickly adoption might happen, I want to be able to stay for as long as possible. I think today, where the world is, how adoption is, I think adoption is happening incredibly fast. And therefore, I would feel a lot more comfortable having maybe a more traditional fund, a 10-year structure. And that's probably what we'll do for the next fund, because, hey, there's a lot of LPs would love to work with that can't do evergreen. So I want to be able to capture those LPs one way or another over time.
Yeah, clear. And of course, COVID-19 even increased the acceleration of PropTech, the acceleration of the adoption of PropTech. But speaking of the topics that you think are hot for the moment, that really excites you, can you tell us maybe what are the investment teams that you look after for the moment?
Sure. Look, I'll tell you a couple of things. What really excites me is that there seems to have been an eye-opening moment in the last 12 months that people have finally realized the importance of technology, the urgency to adopt technology, and it's so widespread. It's across every stakeholder class. And at the same time, I'm seeing a huge influx of amazing entrepreneurs that maybe have nothing to do with real estate, but are also understanding that this is the largest asset class in the world, and you can tackle so many problems, so many issues, including ESG, by transforming the industry. And so I think that's what excites me the most, is that it's becoming very inspiring for a lot of the entrepreneurs out there. And I think we're going to see so much innovation, so much stuff happening that I don't think we even comprehend how transformation is going to happen. So when you look deeper into this, obviously climate change is probably my number one A priority, B inspiration. And I think it fits very well with us being vision and mission driven. And I think climate change in real estate means so many things. It's the entire life cycle of an asset that can be disrupted, from the materials to the architecture the conception, the building, the operation. So, you know, it's a very broad term, but I think it tackles a lot of potential inefficiencies. So I think for me, that's a huge topic. And I think more generally, I think, you know, the last 12 months have pushed large landlords to completely rethink the existence of their assets, the purpose of their assets, the usage of their assets. And I think technology is going to enable us to transition the use, the perception, the relevance of the built environment surrounding every single person. And so I think it's going to have a great impact on quality of life. It's going to have a great impact on affordability, on accessibility, a great impact on climate as a change. So as I mentioned, so for me, it's I'm overwhelmed by what's going on. And I think the biggest challenge today as investors is trying to stay focused and continue or try to be as thesis driven as possible, as opposed to be reactive, which is, hey, there's so much coming your way, but you have to stick to your thesis and continuously evolve your thesis. You have to question it all the time. But I think you have to try to be very organized and focused, because there is a lot going on at every step of the way of the industry.
Yeah. And speaking of your thesis, an important element in your thesis is that you mentioned that the regulators are one of the large innovation drivers in the construction and real estate sector. So my question for you would be, what are your views on the large regulatory changes that will have that will contribute to transform the construction and real estate industry? And yeah, what could be improved from a regulation point of view as well?
Yeah, so look, I think you're absolutely right. And I never thought I'd say this, but regulations are a good thing in some respect. I think regulations are creating markets, creating opportunities out of nowhere, nothing. In particular, when it comes to climate, we believe that there is no way to solve this issue without a full alignment between the private and the public sector. We have co-invested with large sovereign entities. As you remember, we were the first VC to join the World Economic Forum, where we have access to regulators, lawmakers, large corporates. Those discussions need to be between all of the stakeholders. It's not one side that can solve the problem. It's collaboration, alignment, transparency between all of us that is going to enable this transformation. So when it comes to regulations, obviously you'll see Europe is ahead of the curve. There's a lot of things in store, whether there are regulations or whether there are initiatives to promote new behavior from the corporates out there. And I think US is playing catch up. I'm actually hopeful that US might be ahead of the curve in a few years if they're able to continue on that path. But it's not just Europe and US. Everyone needs to be, aligned. We need to have common regulations, because if you have regulations that are too granular, it's very hard to just continuously be up to date. And sometimes it can be very discouraging if you actually feel like it's a black box. If it's very transparent, very clear, then actually businesses can be built around those regulations and actually can be sustainable and stay there for the long term. But there needs to be a consistency in the way regulators approach some of those topics.
Yeah, and it's also probably a big problem in the European PropTech markets, this fragmentation of the markets. Every market has a different industry standards, regulation, and so it creates for companies a lot of entry barriers. So a startup based in France is experiencing difficulties to enter in Germany, etc., etc. Also because of a regulation, because of the regulatory framework, I would say, probably. But let's speak more about maybe the only kind of commercial question I would ask you today is why should founders select you as an investor? What are your USPs?
Look, I'll tell you the commercial USPs and I'll tell you the more human USPs. I think, look, Evergreen Capital, the fact that we have raised from very large institutional real estate players, amongst others, that give us access to a massive pool of assets, over 40 billion. And it's not just the fact that they might own those assets. We are deeply involved in understanding their operation, in helping them, in plugging technology into this. And we've done it at scale multiple times. And I think that's a huge differentiating factor because we understand how some of the large enterprise customers think. We help them shape their thinking in some way. And therefore, we can really help our startups, our portfolio companies, bridge that gap between the customer need and what the product is meant to do. Because at the end of the day, that's one of the biggest challenges you can see is you can have amazing engineers, entrepreneurs build amazing products, but they might not necessarily be addressing the right problem, or they might not be packaged in the right manner to be able to get the commercial traction. So we play an important role there. We also have a deep care for data science. We have a chief data officer, Otman, who's been my partner from the start, where we leverage this expertise in data science, in digital transformation, to help both sides of the equation, the entrepreneurs and the large real estate stakeholders, in converging, in talking the same language, in understanding the opportunity that comes from the digitization of the industry. And data is one of them, but data is also a challenge because you have regulations around it, and you need to know how to build businesses alongside those new regulations as well. So that's another differentiating factor from a commercial standpoint. I think we have a scale that few other funds have. And I think it's very important to know that we can be there for the long term. We can support for the long term. And I think from a human standpoint, I think very simply put, I think we care a lot. We're not, obviously we're all there to succeed and create value, but I didn't start this to make money. I started this because I wanted to have a greatest sense of purpose and being able to feel that I can make a difference. That's been turbocharged since becoming a dad. And that's really, and you will resonate with this. Since I became a dad over a year ago, I think a lot of things have made sense that didn't make sense before. I think the sense that why are you here? What's your role? What are you supposed to do? As cliche as it sounds, I don't care, but that's the truth. And so I think, being able to work with people who care, who are not there to make money first. Of course, we love that we make money, but that's not the primary reason we're doing this. And I think that is reflected across the entire firm. We have a culture, a DNA, where really we put ourselves out there to help our entrepreneurs. And it's okay. It always sounds weird if I'm saying it, but I think you could speak to any of our portfolio companies, and I think they would echo what I'm saying. So we'll continue doing it. And as I said, our portfolio companies will be our best PR. And I'd rather spend my time helping them than doing anything else. Yeah,
that's a really strong statement that you just mentioned. And I'd like maybe to challenge you a bit. I think indeed what you mentioned resonates really for me, and I'm also driven by the same kind of values of having a positive impact. But let me challenge you a bit, if you allow me. Could you maybe share a couple of anecdotes of how you help portfolio companies from maybe a human point of view?
Sure.
What issues or problems have you contributed to solve?
Look, I think first and foremost, I have gone through a lot of different experience, iteration, challenges, successes in my life that give me experience that I can share. And a lot of the challenges that those entrepreneurs might be going through, it's highly likely that I would have gone through something similar in my life, because at the end of the day, I left the corporate world over maybe not 10 years ago, 8 years ago, and I've built my business. I've built myself. I'm an entrepreneur, and therefore I've been through the ups. I've been through the downs. I've been through huge periods of doubts, And I also know that, you know, mental health is a huge part of the journey. And so I give you, I mean, for example, I'm available 24/7, and, you know, anybody who's one of my entrepreneurs can call me or WhatsApp me any time of the day. And I'll always be there. And I think when we went through the pandemic, I think there was the first few months were very tough for a lot of those entrepreneurs, because we had no idea what the hell was going on. I mean, if you remember, I think that's right about the time we met, but we all thought this was the end of the world. Nobody knew that technology would implode and capital would still be there. And so you had to manage, you know, this huge shock, this huge increase of self-doubt as an entrepreneur. And so I kind of made extra effort to be there, to call, to be proactive, to say, look, don't tell me you're doing okay. I know you're not doing okay. Don't give me the BS that, hey, everything is fine. Everything is not fine. Let's talk about it. Let's deconstruct it. Let's think about it. So that's on the soft side. I think I spend a lot of time trying to help. And I think, you know, practically we've helped some of our portfolio companies scale through tens of thousands of real estate assets and integrate them with large customers and help them on the strategy, sometimes push them in a completely different direction that they initially had thought. And for those who listen, I think in a lot of cases, it's turned out to be a good decision. So I think we're a full service shop, you know. There's nothing that we're not ready to do, but there's also things that we know we're not the best people at doing. And we can't be the solution for everything, far from it. And so that's what so that drives our approach. That when we invest with that ego, and sometimes we will reduce ourselves to accommodate other investors that we know will help fill the gaps that we can't fill. And I think it's very important to know, as a firm, your limits. If you don't know your limits, I think you'll be very short-sighted, and I think eventually you know, you won't necessarily have the impact that you want to. So I think it's another part of our DNA is not knowing what we don't know. And that's part also of what we do.
Yeah. Okay, clear. Now let's speak a bit about the future. So I'd like to ask you the cliche question of what is your 5-year company vision? And you can tell me, look, we don't have 5-year company vision. We have for instance, a 6-month and 30-year company vision. What do we have to do in the next 6 months to reach our vision in 30 years? It's fine, but let's speak about the future.
So look, it starts internally. It starts from within. I think for me, one of the greatest satisfaction that I've been having over the last 2 years is our increased ability to attract amazing talents. And we were not able to do it at the beginning. I mean, we didn't even have a website, so it was a bit hard to attract talent. But I think building a firm that inspires people to come and join us on our journey to make a difference, I think it's the first driver of what we do, because it starts there. This firm is nothing without, you know, our combining collective effort. I think what's important for us is to not lose ourselves. And I think it's easy when you are in this business, which at the end of the day starts by being a financial services business. We have to be, as horrendous the term is, it is what we are first. But I think it's not losing sight of, hey, I don't care about how much AUM we have in 3, 5, 10 years. This is really the last of my concerns. What I care about is, are we going to continue to be as dedicated? Are we going to continue to have as much drive and passion in what we do? Are we going to continue to make a difference? Are we going to be successful in how we invest? And I think that's the most important. Everything else follows naturally. I think if you're pursuing it, you know, the reverse, and you're pursuing AUM and that many fees, and I think that doesn't work. And I think it might work at the beginning, but eventually reality catches up. And, you know, AO, we have a very transparent fee structure with our LPs. When I set this up, we said fees are not going to be a profit center for the first fund. I have everything to prove. People are trusting us to do that. Why should I actually make money on the fees?
Completely agree.
So I don't even take a salary. Okay,
Yeah.
I'm, first of all, I'm incentivizing other ways, but that's how we want to be. Of course, I hope that the firm continues to grow so that we can continue making an impact and having the means to make an impact, that we can continue recruiting the best people. I'd love AO to have, another partner join in so that we can expand and continuously challenge ourselves. I'm a huge believer that you learn from other people. Doesn't mean they're better people, doesn't mean they're smarter. It just means they're different. And so having and maintain that level of differentiation within the firm, not hire the people that think like you, that come from the same background as you, is nurture that sense, and that culture of difference is going to be the only way that we push ourselves as a firm. So that's my view for the next few years.
Excellent. And this topic of the fees is for me a huge topic, because I think there are many VC funds who are just launched because of the fees, and their purpose is not to have value, to generate or to create or to capture value at the end of the fund. So they don't bet their success on the carried, but they just want to have the fees. And so I was like, but why shouldn't we create a VC fund with zero management fee, with another way of financing the operations, and we just want to have a bigger portion of the carried, because it's a fund for entrepreneurs, by entrepreneurs. But anyway, it's another topic.
Look, I'll add something to that, which is you never want your LPs to question why you're investing and why you're growing. And so for us, it's a cost center. Whatever our costs are, it is what we draw down as fees. Whatever is above, it doesn't matter. I don't want to be there in 5 years and having made millions in fees, but I've created zero value. I mean, that would be as I said, I'm not doing this for that. And therefore, I think the mindset is different. But there's also an economic reality. You have to have the means to attract the right people and the talent. There's a market out there. So, it's a balancing act, but I totally agree. I think that blanket fee model, I think, is not there to stay and will be tremendously challenged over the next few years.
Yeah, indeed. Maybe more club deal models or whatever. But maybe a more personal question. What is the biggest challenge that you had so far, or maybe the most difficult time, or even on the positive side, what was the most fulfilling achievement you accomplished so far?
Look, I think it's like any new business. So we're a young company, so you go through different stages. I think we came out of nowhere. We had kept ourselves under wraps for a while, and we came out of nowhere with those big numbers, which I think made a lot of people skeptical, critics not happy to see us. And so you have to always stay the course, which is don't listen to the noise. There's always going to be critics, always going to be people that say that, hey, who those guys are, they don't know what they're doing. And as I said to you, I've always enjoyed being an underdog, and I continue to be an underdog until my last breath. And so I think for us, it's been an interesting journey to understand how to build relationship in a new ecosystem, which is venture. I don't come from venture capital. I'm a newcomer. So it's been interesting to understand this new industry and how to make friends, how to not make friends, how to nurture certain relationships. And I think there's always a period of doubt. Look, we've been investing now for the last year and a half, 2 years. We have very high conviction in a lot of our deals, but you don't always see the fruits. You don't always see the next round revaluation, the exit. So you go through a period where you're operating without a safety net, right? You're doing things, you're very convinced, but you don't see the fruits instantly. It's not instant gratification industry. You have to be patient. And I know that right now the industry is very hot. You see those big uplifts very quickly, but it's not always the case. So staying true to knowing what you have to do, sticking to the plan, I think is very important. I would say our biggest challenge has been finding the right people at the beginning. As I said, we didn't have a website, so people like to Google you, read 20 articles about you, see a beautiful website. We didn't have any of this. but I think that's changed. And so I think where we are today is we approach, thinking about Fund 2, and we approach about bringing more talent to continue evolving as a firm. So that's going to be an interesting few months for us.
And hopefully Relevation will be helpful for you, because we have two innovations. We first invite a number of LPs to join Relevation as well, and so arrange meetings with VCs currently raising capital. And second innovation is that we partner up with different world-class universities, including Stanford, Oxford, Yale, European universities, so they can invite their young graduates for free to join Relevation if they are looking for a job. So we will even have a job fair for the attendees. So exciting news. And I think probably for me, what resonates the most out of your last comment was the notion of building relations. I think from my standpoint, and I'm not in the VC world yet, but I think at the end of the day, the most important is the ability to build relations. I think the VC world is an industry where people are the most crucial aspect. And so I think you really understood that well. The last question for me today would be, you decided to become a diamond sponsor of Relevation, so really the main supporter of the event. Can you tell us why?
I mean, look, it's an easy answer. I think you and I met a year ago when you were starting. You decided to start this in the early innings of a pandemic where the world was falling apart, and I met someone with so much energy, so much passion, and simply put, I think your heart is so much in the right place. And I'm a people's person. I operate a lot on gut feeling, and I knew that you were up to something very special because your heart is in the right place, your intentions are the right ones. And so for me, again, liking the underdogs and seeing that young guy going after it when, again, the market was really not knowing where to go, that's who I want to partner. That's who I want to be supportive with, because that's how life is. And I don't think there's a better way to build very long standing relationships. And I hope you know that you have a friend with me, and I hope it's the same. And regardless of relevation or not, I think we like to back people who have the right DNA, and you're definitely one of them.
Of course, you're a friend. And we are obviously honored to have the support of you guys, because it's also a proof of credibility for the value of the event. Because if you decided to sponsor the event, it's because also you saw the value. And so we are looking forward to the next edition in a couple of months.
Super.
Thank you very much for this super inspiring talk. And people will have the opportunity to meet you also during the summit, obviously.
Sounds good. I look forward to that, and nice to see you.